Thank you very much, Prime Minister. Minister Solana, thank you for your compliments. We are very proud to be a very responsible bank. And Professor Goodwin for a great dialogue. Our next panel brings together some of the most prominent thinkers in their respective fields and on our subject today, competition in the digital age. Mijs, the Executive Director of the European Banking Federation, will moderate, and I am sure it will be a very lively and interesting debate. We have Luiz Awazu Pereira da Silva, Deputy General Manager of BIS, Basel, Greg Medcraft, Director of Financial and Enterprise Affairs at OECD, Barry Lynn, Executive Director, Open Markets Institute, and Cecilia Bonefeld-Dahl, Director General of Digital Europe. Please come on stage if you may. Thank you.
And our view on that is actually similar to what you were talking about, huh?
Perfect. Ladies and gentlemen, I have good news and I have bad news. The good news is that for our panel on competition, we have fantastic panelists. I don't know if you remember, well, I was in a prep call with these people, and we only have 50 minutes, but it was easy to listen to them for 2 hours debating. So you're in for a great ride. So competition in the digital age. And now for the bad news. When Alejandra asked you to vote what you found most worrying, only 10.48% said that competition was any worry. Thank you very much for that. Thanks for that stimulus. Competition means change. And it is always very interesting how fearful people are of change. And should we be fearful of change? Or should we not? Should we just head on? If I'm here in Santander City, I say, bring it on. We can handle anything, and certainly Santander can handle anything. But indeed, if I may quote a small quote, theoretical considerations would lead to the expectation of an increased liability to mental disorder with an increase in the complexity of the mental organization of the brain, said Dr. Henry Maudsley in 1867 about the advent of the steam train. And again, it is constant that we are asked ourselves if the world is changing so fast that our brain cannot comprehend. And I tend to disagree, and so do my panelists. And indeed, talking about competition, is it true that competition law protects the incumbent against innovation, or is it the other way around? Is it breaking open? Will we have Google Bank only, or will we do Google bashing? Of course, I did the logical thing on Google bashing, and I Googled it. And it says, of course, Google came out, we don't understand the question, is what my Google Assistant said. Don't know word Google and bashing in one sentence. But if you read what Mrs. Vestager said in the Financial Times, what she announced, is she said that if you have a huge platform that is so economically important that the burden of proof might have to be changed to the platforms to demonstrate that there are real consumer gains. That is the first one. And that is actually an interesting thought, and it shows how people are thinking. And then talking about banks, because indeed we've been talking about trust for a lot. In my view, because we will also talk about data, banks have a unique opportunity because we are trusted with data. Another fun fact of earlier this week, PricewaterhouseCoopers did a big study in how people feel about giving out payments data. And to their own amazement, the researchers admitted that less and less people feel comfortable with giving away their payments data outside the safe banking environment. So on that note, I think we have a great panel. But if I may start with the first question to the panelists, what is the future? Should we have Google Bank tomorrow? Are the platforms a danger or an opportunity? I give each of you 3 minutes each to make a first proposition on how you feel about the subject of today. And if I may start with you, Cecilia.
Ladies first, huh? So while innovation is always an opportunity, So what will that, I mean, when you get technology, each time we get technology, like you said, we feel threatened. We feel, what is this? This is changing the environment. But normally the innovation also comes into an environment that needs it, that might have been a bit too stable. So let me just give an example. I'll get back to your question more precisely. But when I travel in Europe, I'm Danish, right? Everything I do on payments is an app. So if I'm in a market, I'm buying 2 bananas, I do it and it says pling, and I pay by my mobile phone. So I love that. Then I go to southern Germany and they say, sorry, we don't take credit cards. So basically the diversity of easy payment services, for example, is extremely diverse here in Europe. And I want that innovation. And I get so surprised that I can actually be in a taxi in a European country and they don't even take a credit card. For me, I don't use my credit anymore because it's old-fashioned. So, I mean, I love that service. So my question is always asking back, did the banking environment do enough to give the consumer the best services, like give them ease of use? Or is there also a dialogue on speed, on innovation in traditional sectors that needs to be taken before? So when new technology comes, of course, there is a chance of competition, new competition, but that's healthy, isn't it? And I think what we are looking at right now is that the barriers of one sector, not only banking, but retail, any other kind of sector, is becoming blurry. It's becoming a new ecosystem of players who has to work together. Even in health, we see now some of the biggest players sharing their data with each other, trying to figure out how to give even more value of the data that they already have. And I think that is what we will see. The vision will be a new ecosystem of innovative services based on trustworthy data and, of course, a level playing field.
Okay. Thank you. Barry, if I may immediately move to you, because you're from the United States, you've experienced the advent of big platforms, and sometimes in Europe we're quite jealous of the fact that you have all that technology concentrated in the United States. Has it led to an ecosystem that brings innovation in your view?
No. I mean, it's a system that's eating up innovation in many ways and restricting innovation. You know, looking at you started off by talking about the future, and I think for the people in this audience, you should be afraid. Not of change. You should not be afraid of change. Change we need a lot of change, and we need to embrace change. But you should be afraid professionally, as bankers, because banks are in deep trouble right now. Google, Facebook, and Amazon are disintermediating you from your customers. It's happening more slowly, more quickly, depending on where you are, but it's happening and it will continue. You're losing your ability to communicate directly with your customers. And then, of course, there's the issue of data. You got a lot of data, but they got more. They got a lot more data. You cannot compete. It's just, you're not going to die tomorrow, but you are dying right now. You should also be afraid as citizens. You're all citizens. And you should be, I mean, most of you in this room, you might say, I'm a liberal, I'm a conservative, but you all believe in an open economy, you all believe in democracy, you believe in citizenship. And we have to, it's important now to understand that democracy in the United States, in Europe, our democracies are under real threat. Google, Facebook, and Amazon manipulate how people communicate with each other. Our open economies are under threat because these corporations have captured the power they're closing the markets. They are choke pointing the markets. They're concentrating control. Innovation, we've talked about innovation. These powers have the ability to warp innovation, to choke off innovation, and this at a time when we're having to deal with climate change, for instance, among many other things, this kind of innovation choking off is something that we cannot accept. So you should also be afraid of citizens. So actually there's something here is that this is one of the few times in history One of the few moments in history when selfishness as a banker is a patriotic sentiment. So be selfish, and don't be ashamed about it. So, why is this moment confusing? This moment has been confusing because there's not just one revolution. There's not just this technological revolution. There's also this revolution in competition policy that happened 35, 40 years ago. We may be able to talk more about that over the course of this conversation, but it was a radical change in competition policy. We changed everything in how we regulate competition policy, especially in the United States, but to a lesser degree in Europe. And Europe, to some extent, gets caught up in whatever's happening in the United States. Good news, the fix is easy. We actually know exactly what to do with Google, Facebook, and Amazon. Common carriage, making them neutral, breaking them up, we know how to do that. We're going to do that. And on the other side of doing that is an immense opportunity to build a political economy in the 21st century that protects our democracy, protects our liberties, and actually protects banking.
Okay, thank you very much. And because it goes right to the core of what we're debating. So what do we need? But now if you look at the interaction, Luiz, you've done a lot of studies, and so has Greg at the OECD, on how the clients and how the banks will absorb this new environment.
Look, I think we had Cecilia showing us the glass half full and Barry showing the glass half empty. Let me try to sort of be a synthesis here. I think we should embrace technological progress in financial services as a big opportunity to begin with. It has, for millions of people, brought access to financial services at a lower cost. I think it has, of course, changed the lives of, I think, all of us here. If you think of what it has brought to consumers in Africa or in many emerging markets, it's a huge, huge progress. And of course, competition is the engine through which these externalities can be brought to the benefit of consumers. Competition is, by the way, one of the ingredients for creative destruction. Competition is, in scientific progress, what makes scientists compete with each other and improve theory and practice. If I may take an example I come from Brazil, and take the example of football, for example, where we used to excel. We always thought, competition is very good in World Cups because it brings, let's say, additional teams, and then it will improve the quality of the game, and of course it would sort of improve the contestability of World Cups. Well, this is absolutely true, to the very extent that particularly the sort of advantage that Brazil had in this particular type of game disappeared, and now we are beaten by almost everyone. So not everyone, but I think it's a fact that the competition has indeed. Now, of course, I think we have also to recognize that competition has changed in the financial service, and this is what Barry was alluding to, in terms of the old way in which we saw it was that new entrants would sort of necessarily bring prices low, would bring better quality of services, and therefore would serve better the consumer. And I think, yes, we also need to recognize, but with the particular structure of very large big tech firms in this segment, as you were also suggesting at the beginning, when you have the mastery of data, the mastery of the platform and the network, you are in such a dominant position that some of the benefits of your dominant position and your market powers are not necessarily passed on to the consumer. So this is perhaps where I think we need to sort of pay attention to. Now, what is it that we can do? Well, I think definitely you cannot just measure competition and contestability in markets by the usual former indicator of prices, market size, firm size, and so on and so forth. You need, of course, a better regulation to lower entry cost and to provide perhaps public infrastructure that will extend these positive externalities to all market participants. And I think you need to think of, I think what Cecilia was suggesting, the way in which interoperability of applications extends to the whole set of platforms. Now, let's perhaps end with a sort of a positive note. Instead of thinking of all this as a race to the bottom, maybe we can think of this as a race to the top. I think you are increasingly a set of customers, citizens that are much more aware of what they're doing with their apps. And perhaps in financial services, you will have, let's say, a bit of a competition also for reputation, for the way in which you utilize the data of your customers, for the way in which you make sure that the quality of the service that you offer are compatible with some of the new values that citizens like us are putting into their preferences. For example, the fight against climate change, the fact that you respect privacy, the fact that you have trust, which is the topic of this conference. So if you put all this into one, I suspect that you can sort of construct a set of innovations that are compatible with these principles and that sort of can enhance the quality of life of consumers, at the same time being more inclusive and allowing a greater number of citizens and societies to participate in progress and benefit from technological progress.
Thank you very much. I like very much the race to the top. That's always better, and indeed that's where we're going. Though we may want to be careful that we don't fall off a cliff somewhere. But indeed, as I agree with you, competition policy always had dealt with monopoly, and over the last years there was a lot of concentration on cartels and price cartels. But now, indeed, as you see, Mrs. Vestager is looking at updating or modernizing more towards monopolies.
It has to favor innovation. It has to take care of the problems that Barry pointed out. But it has also, I think, to enhance some of the positive points that Cecilia pointed out. Sort of the benefit of these externalities to all of us, and also to citizens in parts of the world that have a lower income and less, let's say, opportunities to thrive.
I think that is essential, and as we heard indeed earlier on the day, CEOs, people are aware, and people also expect companies to have values, otherwise they vote either with their buying power or even as employees. But indeed, Greg, if I may ask you, you've done a lot of work also on banks in a future environment, and I've heard you say numerous times that if banks are able to adapt their business model to be the trusted partner of their customers, then they will have a big role. Is this true? Is this, or are we indeed in a slow death? Are we dinosaurs?
Well, as a former dinosaur, as a banker for 30 years and then a market regulator, I'd actually give you one comment. I always say, let's harvest the opportunity and mitigate the risk. And I think, if you look at what's happening, it's been predicted for a long time in banking, big tech is attacking payments, they're attacking lending, they're attacking investment products. It's just, it's a new attacker, right? So I think you've just got to get over it. I think that, and the reason was commented, why consumers like it is it's faster, it's quicker, it's cheaper. The engagement's easier. So that's why it's happening. And it's been pointed out, big tech, for example, has huge advantages in terms of they have, as you said, a lot more data. You have this much data, they have a lot more data, which actually makes open banking in Europe a bit ridiculous at actually giving them even more data. So I think that probably needs to change. It should be at least reciprocal. But, the other thing is they have a massive competitive advantage in terms of financial resources, right? If they see a good startup, they'll go and buy it if they think it's a good idea. And that's a big competitive advantage that, both in capital and in cash, they have a lot of capital, have a lot of cash. So they do have huge competitive advantages. But at the same time, I think, there are risks. I think one of the biggest problems with big tech today is regulatory arbitrage. And I think it's time we started regulating similar activities rather than entity-based regulation. I think this is sort of quite ridiculous that we're not regulating. It's about actually activities, not about entities. And I think that has got to change. We keep talking about it, but I think it's got to change. The other thing about big tech is anti-competitive behaviour, where they've got potential to actually erode market contestability by actually, again, buying new innovative startups. We're actually seeing less startups actually around the world, and we're seeing any ones that pop up, big tech buy them up pretty quickly, right? So, and then there's the other issue about data privacy. So, and then there's the issue of discriminatory practice. So there are advantages we're seeing, but I think, as you said, there's two things. One, I think banks actually forget the greatest tool they have, the greatest asset they have, which is something I've been saying for years, is the trust of their customers. The trust of their customers. And I think that's something they should keep. And the focus of this conference is about trust. And I actually think, if you think about, if we look beyond the platforms of today, I think the one most revolutionary development at the moment is self-sovereign identity, which is the ability to hold your data actually holding on your own data, but you still need trusted parties to actually verify your various data. And I think the great opportunity for banks is to become the data custodians of those wallets, or of identity within those wallets. I think that's the opportunity for banks, frankly, to reinvent themselves. Yeah. So, yeah, I think it's not all bad. I think to the point about how competition regulators analyse things, at the moment, yes, there's the consumer welfare argument, which is a way of analysing things, but I think also you need to think maybe you'll have some short-term benefits, but there are longer-term implications that we've been talking about in terms of perhaps longer-term issue of lack of consumer welfare or decline in consumer welfare.
Yeah. Cecilia, do you see cooperation between banks and fintechs? Because you struck me with a very clear statement is, have banks done enough to innovate for the customer experience? And for instance, now we talk a lot about big tech, but in the past, a few years ago, we talked about fintech. And fintech, we don't see as a threat. They take part of your value chain and they innovate in a fantastic way. They created a revolution. One banker that I talked to said, there's only one big threat of fintech, is they make my customer expectations so high that nobody can meet it. But do you see, if you know that banks still have the trust, and indeed a lot of innovation comes from big tech platforms, do you see cooperation emerging?
I mean, honestly, I'm a little bit surprised that banks should feel that threatened. I mean, it's a system of trust, and they have a strength position that is unique. I would say, I mean, it's the perfect platform for innovation. You have everything, you know a lot of things. It's about, of course, you have to use the data in a trustworthy way, and you have to gain the trust. But if you look at the innovation environment and the data and everything is there. I mean, I always thought, like, well, for example, I said the same to the retailers. They have been having my data for ages. I shop the same place. I have never had a tailored offer, and I've been shopping there for 20 years. So I'm like, have we done enough in the traditional sectors to fill that space of data innovation? Data is good. I mean, I want better services, banking services, retail services. I want better, everybody wants better service. I guess you want it too. And of course it needs, that innovation is now becoming a reality, like, for example, also global competition is. Competition, and we've been discussing globalization for, what, 25 years, 30 years? When I was still in university, we were just reading Porter, but it's a reality, and the picture is changing, and global competition is becoming a reality. And we have in Europe one of the most advanced regulatory system. I don't think we need to invent much more. Frankly, I think we need to look at the current regulation and find out, is it suitable for what we can really offer our customers? Do we need to adjust some of the regulations so we can actually give the optimal service to our clients, still, of course, in a trustworthy way? And I think that ecosystem of tech with the traditional sectors is where the future is. Not about a fight against, but finding out, how does it fit? How can we tailor also the regulatory environment together towards embracing what we want to give our clients, and also fitting the environment of innovation that we have today, which is not the same. I mean, technology is not new. We just kind of a little bit missed the bus, and now we're waking up, and we're a little bit busy in the traditional sectors, right? But it's not a no-go. There's still a very strong strength position of traditional sectors.
Barry, are these platforms really, how do we deal with them? Are they all consuming wildfires? Or is what would work, is what Craig has said, is if we regulate their activities, will they then innovate at the same level? Or because one of the things that you say is once you're on the platform, you get eaten because they decide on the pricing and they decide on how and why you get on the platform. Or do you see a glass half full position somewhere?
Or as you know, it's like the issue is also like how they're using innovation to control the pathway. I mean, the question you're asking is of fundamental importance. Is like, what do we do? You know, and you know, I think important to understand is the business models of these corporations, and actually that helps us to get at the key of what they're doing and how they're doing it and what we can do about it. You know, Google and Facebook, they make money from advertising. Google last year, it was about $115, $120 billion from advertising. Facebook was about $55 billion from advertising. That was almost all their revenue, was advertising. The reason that they got so much money from advertising is because they built manipulation machines. They take advantage of the fact they have a platform that you have to use. They have all this data that gives them knowledge about everybody on the platform on both sides of the market, sellers and buyers. But then they have a license because we have never applied common carriage to these essential facilities. We've never applied common carriage to these corporations. They have a license to engage in first-degree discrimination. Now, Cecilia just talked about tailoring. Isn't it wonderful to have tailoring? It is wonderful to have tailoring. But if the tailoring is for you, if it's actually in your interest, that's wonderful. If the tailoring of information is in someone else's interest, that's a terrible thing. And what we have right now are these corporations tailoring information and pricing for the users in ways that serve their interests, but not your interests, not the interests of the people out in the world. So the key thing, you know, to understand that what we have these machines that are in the middle of our society, they're designed to break us all apart into little pieces so that we actually can no longer communicate with each other. We don't share prices, we don't share terms of services. They have all the power, they have all the knowledge, we have nothing. And yet there's a simple, super simple answer to this: common carriage. You know, neutralization of these platforms. And you know, we can still have tailoring of information. We may have to pay a few pennies for this service in which we have tailorized information, but that's a small price, and actually that's a price in which will be balanced out by the benefits of not being farmed as we are now being farmed.
Yeah, indeed, because it's usually, if you're not at the table, you're on the menu, but pay a few pennies. If I look at VPNs, for instance, still too many people are using free VPN services, not realizing that they pay. And indeed, if you're not paying, and people are so used to getting things for free, as we know with our own payment services in banking, that it's very hard to tell them that it's a better service or a safer service if they pay a little bit. So there's also psychology involved. But you make a very important point on manipulation, which moves us on to competition and AI. One of the things that worry me indeed is that these are man-made codes, man-made algorithms which give a certain effect. And one of the things that we have in banking, for instance, is that the algorithm may lead to exclusion to customers. And this is, I would like to go to Luiz and Greg, giving your view on this. Is this a dangerous development in competition, that now a banker sees the client and has their own expertise, or if an algorithm do it, we may exclude with technology rather than include?
So this is exactly, I think, the point where you have to reconcile the positive effects of adding new consumers and having an increase in the credit access, because you have, through artificial intelligence and to better algorithms for credit scoring, identify people that were potentially excluding from banking services and that are brought into the new possibilities of consuming and also accessing financial services. It is true that you have now superior algorithms that can, including lower the cost of access to credit in some instances. By the same token, because of what we've been discussing here, which is the fact that you have this synergy between the data availability, the network externality within the same ecosystems, that you have the risk potentially of creating situations where this type of knowledge, by the same token that it increases financial inclusion on the one hand, it could also lead to a discrimination against some very specific groups, minorities, because you know that, let's say, the algorithm will tell you that they are more risky for some activity or some another. So I think the essence of the intelligent regulator would consist in precisely trying to sort of monitor precisely. Think of, for example, the insurance sector, where you could sort of, through a very sophisticated algorithm, create segregations for specific risk groups that will not necessarily be entitled to the same level of pooling of risks that we have currently. So I think the answer is not to sort of reject the capacity of AI and algorithm to function. It's precisely to try to improve and to understand very well the way in which they have to be activated. And perhaps one of the big progress would be to ensure that there is a monitoring through intelligent regulation of equal opportunity in some of these products and market access. We were discussing trust in this conference. And trust is also about fairness. I think this is a topic that we haven't touched upon. But fairness means that people have to understand and perceive that they have an equal opportunity to outcomes. And one of the ideas is to precisely use the new technologies, not necessarily to discriminate, but to make sure that we understand the welfare consequences of technological progress. And of course, we talk about employment, we talked about the way in which you can change the composition of the labor force, but you can also ensure, examine welfare consequences of technological progress in financial services by making sure that you do have a perception of fairness in the way, as a customer, even if you belong to a minority, you are not discriminated and you receive equal treatment in terms of your access and your benefits from financial services.
Yeah, trust as fairness, and that's, I think, a very important remark. Greg?
Yeah, just three things. I think, I think this concept, I think first of all, the one you were talking about, what they call digital feudalism, which many people are talking about, where basically, big tech are like landlords and actually paying us in cabbages for our data. And I think we're starting to probably have a revolt by the serfs. I think it's going to start happening more and more. So I'm not that pessimistic, because I think people are starting to question about about sharing their data and where it goes. So that's the first point. The second point is in terms of algorithms and discrimination. I think we already have, this is not rocket science. I mean, you think about it in terms of market regulation, been regulating high-frequency trading for a decade and regulating how algorithms are used and, kill switches, etc. We're now in the retail space where basically algorithms are used, and therefore it's about actually, those who actually have algorithms have got to be able to demonstrate that they don't have backdoors in them that allow for discrimination and whatever. So, there are, basically, yes, there can be algorithms to discriminate, but essentially policymakers have the tools already to regulate the way an algorithm works, and it's got to be tested. I think also you think about it in terms of things like discriminatory price behaviour. You know, one of the things we've been looking at is, you know, dual pricing in markets or zero price markets. You know, for example, there are policy tools where you say go on to booking.com. One of the things Europeans are thinking about at the moment is saying, well, okay, the price for this room that's about to go in the next few minutes, actually, the average price people are paying for this room is X, but the price we're quoting you is actually Y, which is above it. So, you know, you go, well, why am I getting quoted more than the next person? So people are starting to think about, in these sort of digital markets, how in fact you can make it fairer in terms of things like disclosure, in terms of things like the algorithms. So these are issues that are being looked at. So I don't think it's, you know, people are thinking about these issues already in terms of fair and efficient and level playing field in markets.
So here we go, and fair, level playing field, transparent, and indeed always have a human interaction. These are important things. Will that safeguard us? Will that lead us? Because I personally am a very tech buff. I've technology. See, I am very angry. Yesterday I spent the whole day going through Madrid trying to find the new AirPods of Apple, and they were sold out everywhere. That's how tech guy I am. But will this platform, will it be safe if we have the safeguards, or should we really break them up? And which is actually a similar question to too big to fail banks. And so is breaking up the only way, or can we regulate and safeguard? May I start with you, Barry, and then Cecilia?
It's both. I mean, you have to, it's not either or. It's not breaking up or regulating. You know, common carriage is a form of regulation. So any time you have a platform that's providing an essential service or a company that's providing an essential good, you have to make sure they're not discriminating in how they provide that service or that good. Really basic regulation. Actually, we can trace it back 400 years, you know, in the modern world. We can trace it back, common carriage, to the Roman, Babylonian times. There's nothing new about this. At the same time, breaking up, you know, does Google need to have monopolies in email and search and mapping and Chrome and Android and YouTube? No, absolutely not. These things do not need to be bundled. So one of the things we're going to do is unbundle platforms that don't need to be bundled together and make these platforms much more open, much more accessible to all comers, and actually in the process also make them more assailable by newcomers. So it's both, it's the challenge is, or the action will be simultaneously neutralizing what needs to be neutralized and breaking up what needs to be broken up.
Cecilia, unbundling,
so, just maybe one comment on AI. AI has so much potential. I'm not really scared about if we have enough regulation. I'm really scared about the conversation that we're having here, how we can control that it doesn't happen. Do you believe that the world is a fair place with people? No, and that's the reason why we have consumer laws. We have anti-discrimination laws. We have liability laws. We have laws on everything. And we need to look at those and apply those. But honestly, decisions made by humans are not less biased than AI. And I think AI is one of the biggest chances of getting rid of biases because you can actually show and prove that women, for example, have less chance of getting a board position if the board is full of men. Good. So I don't think that is actually a threat. I think it's a huge opportunity. And I think that's the discussion that we should have. How do we apply or review the current laws that we have? And how do we make the opportunity happen of not having discrimination, of not making, for example, having to wait? Let's just look at health. I have 5 children. We have the opportunity now, not in the future, now, to predict cancer before it breaks out. Instead, we have a society that waits until you get really sick. Then you go and you say, okay, you have cancer. Okay, go to the hospital. But isn't it an ethical obligation to use data to cure it and to predict it before you get sick. So I think some of the discussions are getting out on hand on artificial intelligence. It's just a tool, and of course it has to apply to law, and of course we cannot misuse it. But we need to use it for what we want it to, and nobody follows a leader who's just telling about all the dangers. We need to define our goals on how we want to use artificial intelligence, and then go after them, but of course make sure that the risks are contained. So honestly, I think this is about looking at the new ecosystem and the new possibilities, making sure that we use our laws and regulation and maybe even change them somewhere because they are not fit for purpose any longer. But also on competition law, I think it's about looking at what we have in a new world and define, you know, is it fit for purpose? And honestly, right now, I don't see the big challenges. Just our mindset has to get used to a new way of innovating, a new ecosystem that is not the same as 20 years ago.
Yeah. What I said is AI is designed by man, and that makes it biased, and man and mankind, not
Yeah, but we can adjust for that. There are
and
methods.
this is the point,
There are
and
methods.
I do agree with you that that is the possibility, but it means that we should realize that things do not come out of heaven. They are man-made, so they need to be regulated at a man-made level. Some things I really hate. One of the things I really hate is time. Because they have a counter here, and especially for me, they have made it 3 times as big, that is flashing. Nevertheless, I believe that this panel has proven that we have a glass, that there's water in it, and that it's both half full and half empty. But the way I see it is, and that is why I would like to give my panelists in one sentence a last word, competition will bring innovation, yes or no? Barry?
Absolutely.
Absolutely, but you've got to think global cooperation, you've got to think more holistically across all of the agencies. It's not just, it's too compartmentalized at the moment. And I agree with Cecilia, you don't need more regulation, just use what you've got a lot more intelligently. That's the key to it. And don't forget about self-sovereign identity, it's the next revolution.
I mean, innovation is the future.
I think I agree that we need to use these opportunities very well. There is a lot of potential. Think, for example, of big data and artificial intelligence. We can determine now the carbon footprint of what we are doing with scanner data. And that's a big help for individually taking action against climate change. So the opportunities are immense. I think we all agree here that we have a set of regulatory tools that can be made to function well. We know some of the risks. We don't sort of need to overemphasize them. We just need to make them function for a better world and for the common good.
Fantastic. At this note, I would like to thank the panel and conclude the future is bright if we make it so. Thank you very much.
That's it. Very good.